Today we are looking at technical analysis using the RSI indicator. So what is the RSI? Well, it stands for Relative Strength Index, and it is an indicator that we are going to use when trading and looking at our charts to determine whether or not we should buy or sell. We use this indicator because it shows momentum in a stock. So if we see a trend going downwards or we see a trend going upwards, it shows us how much momentum and how much support that trend actually has. It does this by showing whether a stock is overbought or oversold on a scale of 0 to 100. And using that scale, we can determine different buy and sell signals. Now I've got the formula for the actual calculation up here on the right hand corner, but you don't need to know it. When we look at it in reality, this is what it looks like. So I've got Apple Incorporated up to today's date, April 8th, and this is the RSI on top here. So we can see two horizontal lines at the 70 and at the 30 level. This is the scale 0 to 100, and at 70 and 30 we see two lines. The bottom one represents the oversold line and the top one represents the overbought line. When the line, which is the RSI indicator, this squiggly one here, when the RSI indicator goes above into the overbought line, it means that your stock is probably overbought and it's running out of momentum. When it enters that oversold line, it means that your stock is probably at a discount, it doesn't have much momentum to keep going down, and it could be a good opportunity to buy. So what we're looking for is the movement of this line inside and outside of these two channels, the 30 and the 70 zone. So when we look at Apple here, the stock is rising, and the RSI indicator is showing a pretty consistent kind of inside and outside of this overbought zone. And then we see a sharp drop off right here where the line exits the overbought zone. That is our sell signal. That is the RSI indicating to us that it might be time to get out of Apple. That is the perfect example of it saying, okay, this is your time to sell this stock. And if we had done that, we would have sold at the end of February here, and we would have saved ourselves a loss of about 30 to 35%. Now, if we look at another stock, this is Tesla Incorporated. In 2019, we can see a clear bearish pattern where the stock is trading lower and lower and lower. The RSI is basically in that lower channel of the inside trading range for the RSI, and then it dips into that oversold zone. Right as this stock really just kind of plummets right here, we can see the RSI indicate that the stock is now oversold, and when that oversold period ends and the RSI moves back above that 30 line, that is our buy signal. That is the RSI saying it is time to get into this stock. The trend has changed. It is no longer oversold. It is going back into the regular range, and the momentum has completely changed. So if we had done that, it happened right here at the beginning of June. We could have got in the first day or two here, and we would have made it all the way up from under $200 to $329. So you would have made about a 60 to 70% return just by going off purely the RSI indicator right here. So a great tool for us when we're holding a stock and when we want to get into a stock to figure out those buy and sell points, especially when used in combination with trend lines in the MACD. The RSI shows us the momentum, whether or not this stock is overbought, oversold, and whether that momentum is changing. So in summary, we use the RSI to make our buy and sell decisions, when we want to get in, when we want to get out. We buy when it exits the oversold zone. So when the RSI line is down in the bottom, it's below 30 and it crosses above 30, that is our buy signal. When the RSI is trending up and it crosses below the overbought zone, that is our sell signal. That is the RSI saying get out of that stock. It's showing the momentum in that stock changing from going upwards to a downward direction, a bullish to a bearish direction, and that's what the RSI is there to do. It's there to tell us that based on the momentum. So lots more to come. This is just one tool that you're looking at these charts and you want to use